What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the Sofi stock. If you've been hearing the details, it looks like Sofi is planning to vote on a reverse stock split at their annual shareholder meeting, which is going to be in July. And a lot of people have been throwing around a bunch of different reasons of why Sofi is planning to do this. We've also had a big YouTuber, the Club, come out and make a YouTube video covering the reverse stock split because a reverse stock split is usually bad news. I was a little bit disappointed in his video because he didn't know the exact reason why. And, one of the reasons he potentially suggested could be because of, slowing growth. And I got really disappointed when he said that because they just had earnings a couple of days ago and increased full year guidance. So, how could something change in literally a couple of days that fintech growth is slowing down? It's actually accelerating even without student loans 2.5 years. So that was a big reason why I got disappointed in his video, because a lot of people are going to watch that video. But Anthony Noto did shoot me a DM and going over that proxy statement, which is like 130 pages, and he's directing me to the exact page that we really need to look at. And I'm gonna attach that document and page number in this video so you can read it, because it is very confusing, guys. I'm pretty good at understanding growth stocks potential, reading earnings reports, but when it comes to this stock shareholder compensation, vesting, Sars, RSUs, that's what we're going to be covering in this video. I don't know anything about that stuff because that is very complex. So we're going to be covering the exact page that Anthony Noto directed me to in this video from that 130 page proxy statement and how it correlates to the reverse stock split. If you enjoyed this video, be sure to smash the like button. Don't forget to drop a comment. I'm going to be commenting back to as many people as I possibly can. And if you know more understanding of why Sofi is doing this, just drop a comment, and I'm going to comment back. Let's get into the video. All right, guys, and we can see the entire market is bouncing because we've literally sold off the most in 5 freaking years, bigger than the coronavirus crash. S&P 500 almost 2%, Dow almost 1%, Nasdaq tech heavy, of course, is up the biggest, 3%. Small cap Russell up 2%, and crude oil is up 4%. We can see SoFi is doing pretty solid today, up about 16%. It was up as high as 20% on the day. It's like in my top 10 for overall growth stocks out of 100 growth stocks, so it's doing really good today. That's because there's a lot of short covering, it looks like. All right, guys, so check this out. I posted this a little bit earlier. This is on top of a many other posts. You can follow my Twitter to get the full details. SoFi reverse stock split rumors getting out of control because nobody knows exactly the details why. Short interest, a lot of people have been talking about. Reverse stock split will lower the float and decrease the shorts potential to keep it down. I said, we are as high as short as Tesla 10 years ago, so the float needs to be shrunk. Fintech growth is deteriorating, problems ahead of us. This is what the club was saying could be a potential reason why a reverse stock split is coming. I got pretty disappointed once again because we just had earnings a couple of days ago, increasing full year. So I don't think SoFi is reading out until 2023 of what's happening right now if something's changed. So I don't think growth is deteriorating at all. I think growth is accelerating. So of course, the growth deteriorating would have to do with, the stock price going into penny stock land because it, goes down so low. They want to do a reverse stock split to bump up the share price. Like a 5-to-1 would bring the stock up to like $24 from where it's right now. So a stock split normal is good because that means there's so much demand for your stock. You want to bring it down so more people can buy. A reverse stock split is usually bad because it increases the stock price from being so low, and it's usually a sign of weakness that companies do. I believe General Electric just did one to make more people try to invest in their company. And then we have some people talking about SoFi trying to list on other exchanges. Number 4, dilution, stock-based compensation. So there's a lot of different reasons going out there, but I'm going to show you guys. Anthony Noto did shoot me a DM. You can see right here, Anthony Noto shot me a DM about 45 minutes ago, so I'm trying to post this as fast as possible for you guys. And you can see here, he said, see page 31 of the proxy for the explanation proposal 5. And he sent the full document right here. And you can see this is page 3 of the proxy. We invite you to attend the SoFi annual shareholders meeting, 10 a.m. on July 2nd. These are the proposals. Let's just get into them real quick. Proposal 1, to elect 10 nominees currently serving as members on our board members and named and attached to proxy statement. Okay, number 2, to indicate on the advisory basis the preferred frequency of stockholder advisory votes of the compensation of the company's named executive officers. Okay. Proposal 3, to ratify the selection of the audit committee of the board directors and whoever that is as the independent registered. Okay. Proposal 4, to amend and restate the 2021 stock option and incentive plan for SoFi Technologies to provide an increase in number of shares currently available under the 2021 plan and further amend the evergreen provision beginning of January 1st, 2023. And this is the one he's talking about, Proposal 5, to approve an amendment to the company's certificate of incorporation to give the board of directors discretionary authority to effect a reverse stock split. Okay, so this is pretty serious because usually this is a sign of weakness when companies do reverse stock split. I remember the most recent company to do one is General Electric because no one has invested in their stock for years. So we'll take a look at, the exact page that Anthony Noto was recommending, which we can see here is page 31. And you can see here on page 31, we have stock appreciation rights that come up as the first thing. This is SARs. And if we click right here, the Sars are a type of employees' compensation linked to the company's stock price during a predetermined period. Sars are profitable for employees when the stock's price rises, which make them similar to employee stock option ESOs. Okay, so it just looks like it's another form of a way to pay employees compensation. We also have restricted stocks and RSUs. Restricted stocks, RSUs are a way your employer can grant your company shares. RSUs are nearly always worth something, even if the stock price drops dramatically. RSUs must vest before you can receive the underlying shares. Restricted stock awards are grants of shares of SoFi Technologies common stock that are subject to various restrictions, including restrictions on transferability and forfeiture provisions. Shares of restricted stocks will vest and the restrictions on such shares will lapse in accordance with terms and conditions established by the plan administrator. Each RSU is a bookkeeping entry representing an amount equal to the fair value market of one share of SoFi Technologies common stock. I really wonder who comes up with this fair market value because we know it's not the analysts. Okay, they're not going to go giving these RSUs off of, Bank of America's price target. So I wonder who comes to agreement on that. Upon meeting the applicable vesting criteria, the participant will then be entitled to receive a payout for his or earned RSUs as determined by the plan administrator in the form of cash or shares. And this is the very important sentence I believe he's referring to, okay? And determine whether restricted stocks or RSUs should be granted and or the vesting schedule for such a stock award. The plan administrator may impose whatever conditions on vesting as it determines to be appropriate. Okay, so that's very, very important. If we go back to my page where I was talking about, different things that people were talking about, they don't really make sense, compared to what that document is saying. If you scroll down to this guy right here, I'm telling you, there's some smart people out there. Take a look. The truth is 5, going to issue more shares without additional paid capital. Nothing about short selling. Don't be silly. So it looks like, it has to do with, them paying out these RSUs and SARs without, using their own cash. They got over $1 billion cash and cash equivalents. So it looks like this is another way to fund these types of shares. All right, guys, so I'm going to let you read the rest, okay? It really just has to continue to go on with those RSUs, those unrestricted stock awards, SARs, it's just the same thing. So the good news is SoFi's growth is not slowing down, okay? That's the best thing that I can tell you right now, okay? This has nothing to do with them in fear of the growth slowing and them going to penny stock land. It looks like it has to do with things more complex, like compensation, raising more capital without, going to investors, etc. So that is the detail. Do your research on SARs, RSUs, stock awards. There's a lot of complex things to go over in this document. I just want you guys to know SoFi is still firing on full cylinders. It just went to the public market as a SPAC, and it looks like they're finishing out, their paid restricted stocks, etc. for these SARs and RSUs. So I'm very confused, but as you can see, some people on Twitter looks like they know exactly what's going on. But just know SoFi is still in a very, very strong position with, balance sheet, cash, growth. I'm telling you guys, this stock is going to really make its way out of this level. I don't believe we should be down this low. I think a lot of it has to do with, the type of environment we've been in. And remember, guys, there's dozens of other stocks like Palantir, Open Door, Robinhood that are literally around the same stock prices as us. Everything's around 6 to 10 right now. So it's not just SoFi. So we are in really good hands with this SoFi management team. Let them get this stuff done. We can't control this. Once again, read up on this page 31 document. If you made it to the end of the video, I want to say I really do appreciate it. I enjoyed doing this video for you. Once again, SoFi is still firing on full cylinders. If you guys go over to my Twitter, you can see, they blew out earnings compared to companies, like an Upstart, like a Robinhood, okay? We're at the top with like a Firm and Lending Club right now. So SoFi, once again, their book value is right around $6. So we are above book value right now, but we should be much higher than that because we have extraordinary growth heading our way. So be sure to drop a comment if you have a further understanding of what's happening with page 31. There's a lot of confusion out there, but I hope this, covers it and, keeps people confident. Once again, my name is Kyle. Hope you have a great day.